welcome. You're watching Business Today TV. This is Market Today. I'm Sakshi, Batra, and with me is Shail Bhatnagar. Well, it turned out to be the first negative F&O series since March for the Nifty. But as we begin a new month and a new series, the question is, will the trend in markets be new as well? Or will the last 2 weeks of August continue to cast a shadow on the Nifty performance in September as well? We'll discuss all of it. But first up, the top headlines this hour. Indian blue chips begin September's F&O expiry on the back foot as major index heavyweights come under sustained selling pressure, forcing the Nifty to close at a 2-month low in August. Rally continues unabated in small caps. Carmaker Maruti will lead the charge for the bulls as the last week gears up for the auto numbers data. Mid-cap software stocks, forging companies and chemical shares provide the much-needed support on the long side. Very good morning to all our viewers and good morning to you, Shail, as well. You're joining us from the financial capital today. I hope there are enough and more cues for getting the Nifty kick-started because you're right there where the action is. So the Nifty did witness the last hour profit booking in yesterday's trading action. We did see the Nifty raising all of the intraday gains. It also broke the 3-day winning run as well. I hope things are much better this morning.
Good morning, Sakshi, and greetings from Mumbai. Good morning to all our viewers who are watching us from different parts of the world. And it's a wonderful morning in Mumbai, Sakshi. Sadly, that's not so for the Nifty. We've seen structures on the bull side which are crumbling on the charts. We'll talk about this in a bit in a while. But the fact remains that, we were hoping against hope that August would be successively better week by week, but disappointment there as well. About 6 weeks of, downtrend on the Nifty. And at the moment, as you see the daily chart in front of you, you'll see it at its lowest level since 3rd of July. So a 2-month low in front of us. And there is this low probability or possibility that things actually might slip further from here on. The Nifty lost somewhere like 2.5, almost 3 percentage points in the month of August, and this was after a very, very sharp rally in the preceding 4 months. So some of those gains are being taken back by the market, and the chart that you see shows Nifty on a daily basis lower at its July 3rd level. So that is one thing. What is really bothering me is that the 50 EMA, the 50-day moving average, on which the index took a lot of support in the month of August, Sakshi, that seems to be giving away. And yesterday's close, the 2 previous days sessions, which is Thursday and Wednesday, at both times the index has closed at its day's low, and that's hit the 50-day moving average very strongly. And that's the reason why you see this decay happening below that average. So one is that point. And secondly, if you see the 5-minute chart, which is how the markets shaped up, and you very well mentioned that, there were slippages towards the end, and it closed at its day's low, 19,253, 93 points lower. Sakshi, I was watching a lot of F&O data yesterday. Would you believe it that in yesterday's trade, there is only one stock in 51 shares in the Nifty which has a buildup of long positions, and that's Maruti. 32 Nifty futures saw longs being unwound on Thursday. That was the end of the August. And of course, 10 futures on the Nifty had built up of short positions. So things are not looking good at all. And amongst the 10 index heavyweights, like Reliance, Infosys, ICICI Bank, Axis Bank, all 10 of them ended in the red yesterday. So September is starting on a very weak note as far as chart structures are concerned, and that's a bit of a pain. If you see the index support on the options chain, for the first time in many, many months and many, many weeks, support structures are now emerging below 19,000. So that's something like saying that 19,000 may not stick around for a long while. We are already at 19,253, and 19,200 is a fairly strong support. But given the propensity of shares such as Reliance, you'll see the chart in front of you. HDFC Bank, you'll see the chart in front of you on a daily basis. You are seeing weakness creeping into these chart structures. Look at Reliance. This is at June lows. Of course, there was a bit of a mini bonus in this after the Jio Financial Services stock was demerged. But these are structures. What can you do about them? So supports now emerging at 18,900, 1900, and of course 19,200 on the Nifty. And the resistance is creeping closer and closer to the current market price. So that's 19,300, 19,400, Sakshi. It's a bit of a painful week for the Nifty ahead.
Painful week for the Nifty ahead, but I hope, the Bank Nifty really steps up to its game, at the beginning of the new series as well. Remember, the banking index fell nearly 1,700 points in the August series, and majority of the underperformance, like Shail pointed out, did come from the heavyweights like HDFC Bank, ICICI Bank, both of which were among the top losers also in the August series. I remember, Shail, we were discussing yesterday how you do expect the blue chips to really step up their game in September. Will that start to come in from the banking heavyweights?
Sakshi, I'm not sure whether we can show you the Nifty mid cap and the Nifty small cap chart. Actually, there is a dichotomy in the market. So mid cap and large caps are showing record highs on a daily basis, whereas there is a downtick on both the Nifty and the Nifty Bank, and this is not possible. So what is happening is that sensible players are either booking profit on the Nifty and the Nifty Bank, or worse, putting in short positions, which is fairly apparent. And at the same time, they are showing this rally in the small cap and the mid cap index and enticing retailers to buy all their delivery as well as liquidity. So this is not possible. I mean, markets work in harmony with each other, especially indices. So only two things will happen. One, either blue chips will correct higher after this fall in August, which is not happening on the charts, or mid caps and small caps will show some kind of profit booking. They are overstretched on all valuation parameters. Some of them are driving up because of low liquidity and whatever other extraneous factors that impact markets on a daily basis. But the fact is that the biggest underlying truth in the market is mean reversion, which means that whatever has gone up very sharply will correct lower, and whatever has gone down very sharply will correct higher. There is no other way. But markets also have this habit of being irrational for an extended period of time. For those people who are thinking of taking long positions in mid caps on a fresh basis, they should be very careful, Sakshi.
Okay, one needs to have a very careful approach to the markets in this current setup. That's what is the word coming out. But from the F&O space, at the start of the new series, what are you watching? Are there any specific stocks that are on top of your radar, Shail, today?
Yes, Sakshi. The sentiment in the F&O space and on select counters remains fairly strong. In terms of sectors, of course, auto will take preponderance today because you have the monthly numbers of August coming in, and the biggest bull there is Maruti. Like I mentioned, that the only stock showing long build-ups on the Nifty is Maruti, and it's tantalizingly close. In fact, above the 5-digit mark for the first time in many months. So strong build-ups are expected here, provided the monthly numbers are with you. And the number that we've seen yesterday was an uptick of about 3.6% in open interest and 1.6% in price. You can see the breakout in terms of price and volume on the charts right in front of you. So Maruti is something that I'm looking at. I'm sure it's going to consolidate above the 10,000 point mark. The last time it hit those levels was somewhere before demonetization. So there's a lot of pent up, how should I say, structures putting place as far as Maruti is concerned. And the next one is Persistent. If you remember, this was the first stock we picked up in yesterday's early morning trade. A fresh high here, record high on fantastic volumes. Delivery statistics are 100% higher on Thursday compared with Wednesday, and a 3.1% uptick in price. Fantastic structure on the charts in front of you, and a 5.4% rise in open interest. So lots of bullish developments happening on Persistent. And the last one is HDFC Life. A nice swing trade happening there. The price hasn't reacted much. You'll just see in front of the chart there, and you'll see how the stock is slowly moving up. Of course, it's closing in on its 52-week high. So these are the 2 or 3 stocks based on data and technicals and charts that our viewers can look at it from the education point of view. Sakshi.
Sure. Maruti Suzuki, Persistent Systems, HDFC Life. We'll continue to watch these stocks as the markets hit pre-open as well. As far as the global cues are concerned, we did see a muted session on the US markets overnight as traders await jobs report today to gauge the outlook for the Federal Reserve policy going forward. Wall Street indices ended mixed, and the S&P 500 was down about 0.16%. The Nasdaq was up by 0.1%. Dow Jones was also down by about 0.48% as well. However, the Nasdaq was up for the 5th straight session, but off the best levels that we've already seen. On a monthly basis, when we see the S&P 500 and the Nasdaq have finished down respectively 1.8% and 2.2%, marking their first monthly decline since February. So the muted trend continues there, and the stocks in the Asian markets also were mixed in the early morning session. After a muted session on the Wall Street, the Hong Kong stock market is shut, remember, as the city is bracing for a hit from what may be the strongest storm in the last 5 years. So that is something that you need to watch out for. Nikkei, of course, is the better one that's performing in trade, 0.6% higher in trade as we speak. Remember, in the Chinese markets as well, investors will be monitoring the shares of Chinese banks and property developers following the move by the government to allow the nation's largest cities to cut down payments for home buyers and also encourage lenders to lower the existing rates as well. So that's as far as the realty space is concerned, and therefore the Shanghai markets will be in focus. The GIFT Nifty has indicated a muted start in today's trading session, so we'll continue to watch out for those points as we move forward. FIIs sold shares in the Indian markets yesterday to the tune of 2,973 crore rupees, while the domestic institutional investors purchased 4,382 crore rupees worth of stocks in yesterday's trading session. Remember, the other monitoring factor for you will also be the crude oil, which jumped to $86.7 a barrel, advancing for the 3rd straight session. So we'll keep an eye out on the oil and gas space as well. But Shail, I wanted to understand from you, as far as the FII sell-off is concerned, do you think the markets, to return to considerable uptrend, for the FIIs to return is absolutely crucial?
Sakshi, no doubt. Absolutely. But the fact is that all through August they've sold, and now the number stands somewhere like 23,000, 24,000 crore rupees on a net basis. And that's the reason why you see a decline in the Nifty, especially, and the Bank Nifty, because they typically invest in heavyweights like HDFC Bank, ICICI, Axis, State Bank of India, the Bajaj Twins, L&T, Infosys, TCS. And if you're booking money there, this is not to say that the 2,900 crores that have gone out yesterday, or the 25,000 crores that have gone out in August are from these frontline counters, but a vast majority of them are from such shares only. And it's fair. I mean, you've put in about 1 lakh crore rupees in the first 4 months. You take out 23%. That should not be a problem. But like I said, the amount would be less, but they set the sentiment on the Lal Street. And if you see, DIIs have purchased 2x in yesterday's trade compared with what FIIs have sold. Yet, both indices have ended at day's low. So that is how it is. I don't know how long this will continue, but you need a green tick and a sustained green tick on FII numbers for at least the main indices to come up. And the reason why FIIs don't generally be in second, third rung mid caps is because of the liquidity trap, which means that you can sell 5,000, 10,000, 15,000, 20,000 shares without impacting the price and buy a similar quantity. But if you want to buy a lakh shares, the price will move either way because of your actions. Therefore, you see a very strong rally in mid caps and small caps because FIs are absent there. But in blue chips, you see the impact of their sales, Sakshi.
Absolutely. So let's quickly get down to all the stocks that you need to keep on your radar today. First, of course, is Reliance Industries. One needs to watch this out as the company's media unit, Viacom18, has bought the TV and digital rights for the Indian cricket team's home series for the next 5 years. So that could be, something that you should watch out for. The stock ended lower by 0.5% at 2,407 yesterday. Genus Power. That's the net stock that you should watch out for. The company stepped down wholly owned subsidiary has bagged an order worth 2247 odd crore rupees. And this includes design, supply, installation and commissioning. The total order book for the company now stands at 11,000 odd crore rupees. Yesterday, the stock was up by almost 5 odd %. 258 is what we really saw on Genus Power. We'll watch out for this stock again today. Remember, yesterday, Shail was also mentioning Aditya Birla Fashion Retail with the kind of momentum that we'd been looking in the textile space. Today, there's news flow. The company has said that it's completed the acquisition of 29% stake in TCNS Clothing pursuant to the open offer. It also plans to raise about 750 odd crore rupees on or after September 4 through bonds on a private placement basis. The stock was slightly down 0.8% yesterday. We'll watch out for the stock again today in trade as well. PNB, Punjab National Bank, has now raised the lending rates by 5 basis points across tenures except, effective from today. The shares were down by about 1 odd % at 63 odd levels. We saw Punjab National Bank trading at yesterday, but we'll watch out for, how the stock reacts to the news. Shakti Pumps, again, an order inflow coming in for this one. The order is coming in from Haryana Renewable Energy Department for the company for supply, installation and commissioning of the solar water pumping systems. And I think in 120 days or so, the company will commission this order as well. IT Decementation, another stock that you should watch out for. The company bagged marine contract worth 3290 crore rupees. The shares were up by about 2% yesterday at 217. And of course, the auto stocks will also be in focus here. Shail, anything else that you'd like to point out?
Sakshi, very, very strong rallies coming into mid-cap IT stocks. You mentioned the Nasdaq rising for the 5th day in a row. And if you recollect, we pointed out Birla Soft yesterday, immediately once the markets opened. So I'm looking for some kind of a support which the broader markets will take from mid-cap stocks in the software sector. Of course, the chemical space is abuzz. Mid-caps in the chemical space will rise. And you'll see very, very strong tailwinds coming into sectors such as fertilizer in the coming days. So these are the 2 or 3 things that I'm watching at. Frankly, only the cash market holds interest because that is where long positions are getting very, very seriously built. But let's see for how long that happens. I get this feeling in the pit of my stomach कि बहुत हो गया और कुछ ना कुछ correction होना चाहिए in the mid caps and small caps. Or there is more pain on Nifty and Bank Nifty in September. This is what my gut feeling is.
Okay, Shail. Well, our guest is with us. Mayuresh Joshi joins in. He's the head of equity research at William O'Neill India. Very good morning to you, Mayuresh. Thanks a ton for joining us on Business Today TV with me and Shail right here. Which are the key stocks that you're watching out for in this new trading session at the beginning of a new series and a new month?
Morning, Sakshi. Morning, Shail sir. I think through 2-3 aspects. One, I think just to cite Shail sir's tweet early in the morning that he probably put out and that he was mentioning, markets can remain irrational longer than you can remain solvent. और उसके बाद उन्होंने immediately एक tweet डाला कि भाव भगवान छे. So I think that in the mid-cap universe is probably irrational at this point of time. Totally concur with his views at Markets with India. I think the entire benchmark that we've got, number of distribution days going up at the main index, but broader markets holding up. So I think that dichotomy has to sometime reverse, maybe in the next few days or weeks. but we remain a little bit cautious and therefore a little bit more selective. A couple of sectors that we are probably looking at is paper stocks that we discussed last week.
Fair point.
Because our own sense is that a lot of the unorganized paper companies or the smaller paper companies depend a lot on water and captive power. With the El Nino effects going on, the expectations of water shortage for these firms to probably have enough production coming through, paper prices might actually go up, and the better integrated players might actually show a huge amount of volume and value gain. So West Coast paper, the integrated players like an Andhra paper, JK, Orient can definitely benefit. The other space probably is textiles, and a large element in terms of both the PLI scheme working for them. At the same time, we're probably expected to see a lot of FTA agreements, whether it's the UK or the EU, expected to go through, which means that a lot of the cost dynamics, which were not in our favor and supporting a lot of economies like Bangladesh, Pakistan, a few of the African economies as well, should start working in favor of our guys. Demand remains strong. And again, the same concept like paper. I think the vertically integrated paper mills should do relatively better as we move ahead. So have a watch on stocks like Indocount and stocks like KPR mills. From a momentum perspective, broadly, our sense is that real estate is one space that you can probably bet on. We're probably looking at Godrej properties from a pure momentum play. Expectation largely, Sakshi and Shail, is the kind of numbers that they've given from an FY24 perspective. Deliveries of 12.5 million square feet compared to 10.5 for the previous year. Booking value expected to exceed 12,500 crores. Collections expected to exceed for the first time the five-digit mark at 10,000 crores, with leverage remaining at 0.54. Margins did take a hit in the last quarter, but the expectation is they should revert back to normalized means in the second half. The numbers that we probably got in terms of inventories going down and a huge response coming through, specifically for the Western market and their launches that they probably got in key regions of Gurgaon, where I think the demand has been extremely high. Our own sense is the high dependency and saliency in terms of an asset-light model should help those rich properties. So purely from a momentum perspective, you're looking at targets of 1900 on this one, at a stop loss at 15.
Right. And good morning, Mayuresh. Greetings from your own town. The interesting part about Godrej Properties is that, there is, in terms of the sheer stock price, there is a decent margin of safety, because the all-time high that we've seen on the stock is somewhere like 2,500, and this happened, post-COVID, October of 2021, and at 1645. Nevertheless, one of the finest balance sheets that one can see in the real estate space, and of course the branding of a very well-known industrial group that has a very, very huge land bank in a land-starved city like Mumbai. So those are the positives. But at the same time, the price earnings multiple is 70. So as they say that महंगी चीज़ हमेशा महंगी ही होती है, but that's how it is in the markets. And yes, I completely concur with you. They are just giddy valuations in mid caps. And, all of us are part of lots of WhatsApp groups. People are thinking that, they've mastered the art of stock picking and chart reading because of the kind of price action that you see in mid caps. And nothing could be far away from truth. They need to be very, very cautious, because enough is enough. And it's just, it doesn't respect mathematical laws, and markets is nothing but maths beyond a certain point of time. Therefore, people need to be very careful, but not with Godrej Properties. Paper stocks, and of course, the current favorite for Mayuresh, chemical space. Anything that catches your fancy? Last time you met us, it was Orient Paper.
Yeah, so I think the continuation in terms of our buy watch list, Shail sir, on the chemical space, and we continue with Orient Paper. I think the call probably goes there as well. West Coast Paper is something that one can keep an eye on, but he needs to take some element of price strength as per Mark Smith. But on our watch list, and since you mentioned chemicals, and you are a master in chemicals yourself, Shail sir, so I think I don't have to specify anything more than that. Pheniotex chemicals, I think, is something that we are keeping on our radar. Two, three things very interesting happening for this stock within the space itself. Again, it's a specialty chemical company providing niche chemicals to textiles, to paper, and a host of all niche industries as well. The overall top line growth has been very, very impressive in the past year. Quarter one numbers have been impressive as well. The expectations of margins remaining extremely stable over the next few quarters because demand, as we see and what we've listened and heard in the con call, remains extremely strong. Realizations expected to remain strong both domestically as well as the export market for the key niche industries that they probably serve. And even from a leverage perspective, I think it's not highly leveraged at this point of time, reasonably managed balance sheet as far as leverage is concerned, which means that the earnings can probably still come through within the chemical space for this company in particular over the next few quarters. I think we're keeping an eye out for Pediatrics shares.
Right. And about 2-3 years ago, when Mayuresh first time mentioned Pheniotex Chemicals, it was trading at about 80 rupees, now at 313. And of course, the fact that it's a very well managed balance sheet, total debt of just 7 crores, cash of about 61-62 crore rupees on this mid cap company, revenue of about 513 on a trailing 12-month basis, 513 crores, and a market cap of 3,400 crores. Mayuresh, where is this headed as far as price targets are concerned in the medium term?
So again, I think we are extremely sensitive as far as pivot levels are concerned. Shail sir, you already know about that. So I think if it crosses those levels of 318, 320, 322, roughly that range of 320, 322, I think 18-20% upside is very much possible on this one. I think the space within which it operates and the margins at which it operates as well, at around 20-21 odd percent, I think very high margin business with the assumptions of the niche products that they've probably got, and therefore an 18-20% upside not ruled out once it crosses 320.
Okay, Mayuresh, quickly, if you could help me understand, what would your understanding be of Geo Financials? That's the stock that we will be watching out for. I think it gets out of the indices today. What should one do, today itself?
So it gets out of the Sensex, it stays in the Nifty. I think it gets out of the Nifty in the coming week with the assumptions that they've drawn. But a large element in terms of what the chairman mentioned, very well capitalized. I think the kind of money that they've probably pumped in Geo Financial is pretty huge. So I think the kind of brownie points that they get as they start off this NBFC compared to a lot of NBFCs from leading houses, which took a lot of time to probably set themselves and establish themselves. I think a few key parameters, including capital, already with them. A very experienced team, including KV Kamath. You've got the ex-chairman of SBI there in as well. So I think the team very much in place who can probably drive the right strategy. And the strategy itself evolves around a digital platform, which means the reach itself in the beginning, assuming their existing database that they've got, is pretty large. So I think the triggers are there. The only question mark, again, like me and Shail would only these questions actually would be valuations. It's getting compared to a Bajaj Finance at this point of time with no numbers on its books at all. So I think any investor who holds it with a longer term view of more than 3 to 5 years can definitely hold on to it. New investors, I still believe, I think the intrinsic value probably still remains anywhere between 180 to 190. So whether it comes or not, I think it's something that you'll have to have your patience.
Fair. One of the best capitalized NBFCs in the country at the moment is Geofin. A couple of quarters worth of earnings should give comfort to these valuations, but those are about 6 to 9 months away. We'll welcome Akshay Bhagwat, the Senior Vice President for Derivatives Research at GM Financial Services. But for the moment, before we say hello to Akshay, we'll say hello to pre-open trade. 36 points higher on the Nifty, 19,267 is what the opening quotes are, and immediately back in the red. So let's look at stocks that are causing this pain as far as Nifty is concerned. The top loser being State Bank of India. Okay, it's again flipped. So let's look at HDFC Bank. 0.7% lower, 1560. Reliance is flat at 2410. And I'm very keen to find out what Infosys is doing. 0.3% higher, 1440. Remember, yesterday we talked about how software sector could be used to prop up the Nifty when other blue chips are being sold like there's no tomorrow. Bajaj Finance 0.5% higher, 72.25. Bajaj Finserv flat at 1495. ITC 0.7% higher, 442. And Hindustan Unilever 2500. What is TCS doing? 0.2% higher, 3365. This is how the Nifty is. Flat now, 19,266. Let's take a very, very quick look at what's happening in FNO, and then we'll touch base with Akshay. Okay. PSUs off the block. Gas Authority 1.6% higher, 116.90. Bata 1.2% higher, 1710. I see Torrent Pharma surprisingly on the green side. It should be on the red. Granules 1.9% higher, actually 2.5% higher, 304.95. So probably it's going to be a pharma day because you have Apollo Hospitals, Glenmark Pharma, Dr. Reddy's amongst the gainers. And one very, very quick look at NSE 500. I want to see what the top gainers are. It is from the media set, Network 18 and TV 18 broadcast. With this as the background, let's get our chartist man in, Mr. Akshay Bhagwat, Senior Vice President, Derivative Research, JM Financial Services, joining us. Hello and good morning to you, Akshay.
Good morning,
Your
Shail.
view on the Nifty. Lot of pain in the charts. Some charts are crumbling. There is a build-up of short positions everywhere. How do you see this for the month of September?
Good morning, Shailji. Thanks for having me on the show. If you look at the way the August series panned out, it was more of a dampener, but we never actually felt the pinch of the fall because, falls have been restricted to 2 to 3 trading sessions, and you always had a hope that Nifty might see the all-time highs again. So as I see rollovers, which we move ahead for the September series, the rollovers were in line with the averages. So 78% rolls was what we saw, and the average stands around 77%. So the belief is that there has been no major short rolls, at least in the Nifty, going by the basis, that's the premium at which the future trades to the spot, and the rollover numbers. Now, as far as the positioning goes in the derivative segment, first of all, if you look at the long short ratio, the FII start with a neutral positioning of 50 longs to 50 shorts in the index future segment. And for the coming 7th week expiry, 19,200 put has a significant presence of writing bets. So the belief is 19 put 200 put should come into as a savior for the Nifty, at least for the next couple of days. This level should be the key for a trader as to how 19,200 plays out, because you have a lot of put writing bets positioned at this strike. And even if you look at the monthly series, it's the 19,000 strike. So we do not anticipate any major panic situation as yet in September. But one caveat I have is that September month is notorious for big price moves. The last 3 years have registered a price moves of over 5% on either ways. So it's going to be it's a pot boiler in the making. And let's keep the fingers crossed that Nifty holds the support and stages a comeback.
Right. Akshay is young, bright, and of course very enthusiastic and optimistic about charts, and therefore 19,200 and 19,000 is where he sees the support. And I hope and pray that these two support levels hold for the month of September. But he also gives a caveat. It's one of those really, really volatile months that, buffet the Lal Street either way. Akshay, your top 2 picks for today.
The trades which I would be looking forward to first is from the pharma space, because pharma is a defensive bet, and especially in this kind of situations, I believe pharma should be the sector which should be looked forward to on the buying front. So Cipla is the first trade which I look forward to on the buy side. Cipla is more or less charting a short-term support base at around 12.15, 12.20. It's been on a stellar price move right from the last couple of months. and the belief is that this up move should continue further. So you can consider buying Cipla at the current rates in today's morning trade, and you can keep a target of 1318. That's your first target, and the second target would be 1342. The stop loss on this trade would be 1218, which is below the prior day's low. The second trade which I look forward to on the buy side is Indian Hotel. Now, if they look at the price structure a couple of days back, this chart had a very strong breakout at the 400 level. The breakout is a positive momentum which it brings in the stock, and targets around 420, around 442 to 460 on the upside. So this is the target we look forward to in the Indian Hotel, and the stop loss which we place on this trade would be 405.
Right. Cipla, of course, let's get Mayuresh into this conversation. Mayuresh, the first week of August saw some developments happening on the corporate side as far as Cipla is concerned. Apart from two PE funds, local domestic players have also sort of sounded out the Cipla management in case a large minority stake is available for purchase. How is Market Smith viewing Cipla, already at a record high, and one of those rare outperformers that you see in the pharma space over the last 30 years?
We maintain a very positive stance, Shelter. I think Cipla remains on our global focus lists. Like Akshay mentioned, I think the aspects for Cipla, I think the numbers for Q1 exceptionally good. Expectations of them maintaining that margin band of 22 to 24%, rather between 23 and 24, is very much plausible over the next few quarters. The expectations in terms of a couple of key drugs coming through on the respiratory side, both in terms of the US and the EU launch, can be a huge trigger as far as earnings is concerned. And therefore, the US sales in terms of specialty should probably continue at a very decent clip. R&D expenditure should be probably contained at the level that they are at this juncture. And therefore, I think the leverage that gets played out in terms of balance sheet with new launches expected to come through, specialty launches, a majority part of that over the next few quarters, ensuring high margins for Cipla and therefore ensuring strong bottom line growth might probably still continue. So I think we view Cipla very, very positively. Cipla, Dr. Reddy's probably remain on our global focus list as far as pharma is concerned.
And of course, a blowout quarter expected for hotel stocks. I came from Delhi hoping that room prices, rack rates would be cheaper in Bombay, and no such thing is happening. It's equally expensive, if not more. So Indian hotels, of course, a fabulous pick by Akshay. Very, very nice traction coming in here, and a blowout quarter in the making over the next 2, 3, 6 months, because one, we have these global events lined up. Two, you have the annual season for holiday making in India coming. What other stocks, according to you, are in the limelight in the hotel space when it comes to charts, Akshay?
Shailji, if you could please name some stocks, it would be easier for me.
Okay, Shail is at a record high.
So yes, Chalet Hotels, as I see the charts, a very strong chart pattern in place. It's at a record high. There's no stopping the momentum, and the way the charts are, still there is, although the momentum is strong, it's an overbought stock, but I believe that still there is some 50, 60 points still left on the upside. So as I see the moment, it's about riding the momentum in these hotels stocks, and I would still recommend, despite being overbought, you can consider it as a buy trade with a stop loss of around 510 and a target of 625 with a horizon of around 15 trading sessions.
Okay. I wanted to draw your attention, Akshay, and then I'd request Mayuresh also to look at it. The power space, Mayuresh, we've already discussed before, and the space continues to buzz. The stock that I want your view on, Akshay, is Genus Power. Of course, there's news flow. It has its step down subsidiary has won an order The stock is up 5% in the pre-opening trade, 270, 270, 271 odd. Currently, the 5 days move has been stunning, 12% odd or so. The last 6 months, even better, 200% of a move is what we've seen on Genius Power. Do you still believe that there is enough scope that investors can look at, and currently also they can buy into the stock?
Good morning, Sakshi. So, Genius Power, as I see, backed by the news which you just read out, I believe this is possibly the last leg of momentum run up which the stock has. So, I would advise that if you are keen on the trading part on the stock, you can definitely get in today on the news, because as it stands, it is heavily overbought. There are some divergences which I see on the RSI, which possibly means that this is at the cusp of a possible reversal or a time correction which can span out from here. So maybe 290 at the best is what I see in the next 2 to 3 trading sessions. There is where I would advise booking out your trading bets. And if you are keen on investment in the stock, then I would suggest let's wait and watch for levels of around 250, which I feel would be the appropriate levels to reinvest or get in this stock, with a stop loss of around 225 for extended targets.
Okay. Mayuresh, we've discussed this space quite a lot, but, power generators, transmitters, power finances, the smart metering majors like Genius Power, which segment of the power space really attracts you as of now? We've already seen a sharp run up. What comes next? Which is the beneficiary going to be? Which segment is going to be the biggest beneficiary now?
So I think the entire segment across the value chains, actually, whether they're generators, transmitters, or even EPC players for power, including the financiers, have done extremely well. PFCs, RECs of the world, even Lagarde, like a power grade NTPC, have moved up significantly. I think one space which has caught attention over the last few weeks, obviously, has been the wind energy within the power space itself. And huge amount of traction is still expected as tailwinds. So 10 gigawatts expected to be added. The new tariffs which have come through, the interstate operability which is existing, and the tariff which have probably reduced ensures tariff sustainability, input costs going up. And therefore, I think this space remains extremely, extremely viable and buoyant. You've obviously seen moves in players like Suzlon and Inox Wind. Ancillary players like an Apar Industries has done exceedingly well. Have a look at the Apar Investor Day presentation. They have a 150 slide in terms of how the industry will play out over the next few quarters for Apar in particular. The stock has moved up significantly. But this is one space, wind, and then anything related to wind, which can do exceedingly well.
Right. Markets open in less than a minute. On your shoulders, Akshay, lies the responsibility of explaining to us why mid caps are running amok at a time when blue chips are correcting, and how are you negotiating your clients, telling them that you can't make 5-10% every day?
Uh, well, uh, eh, well, to be honest, the clients are pretty happy, because if you look at the retail, the bets are more concentrated on the mid cap space. And despite the fact that the big boys of the market are really not performing, you always have the options of building some strategies via the futures and options segment, and kind of hedge yourselves in the blue chip companies. So HDFC Bank, Reliance, or be it Infosys, all more or less have been laggards for the month of August. But they have not caused any major dent in your portfolio as yet. So Nifty has been a dampener, yes, but this has been compensated by the mid caps, which has been on a stellar run. So no taking away that momentum from mid caps, and still the belief is it may continue forward, because there's where the money flow is, there's where the strength is, and there's where is the money to be made.
Absolutely. Follow the liquidity till the time liquidity doesn't dry up. Keep a leg open towards the exit, and that's how you trade mid caps. But markets are open, ladies and gentlemen. 10 points higher on the Nifty, 19,264. The Bank Nifty opens on a bit of a back foot, 6 points lower, 43,975. The IT index is in the green, 24 points higher, 31,185. Let's look at what is happening in the index heavy space. Reliance flat 2411. HDFC Bank again flat 1571. Remember, we've stepped into the September expiry, as also Infosys down a third of a percent, 14.29. This probably might be giving you a chance to get into it at this level. Okay. ICICI Bank, again weak, 0.2% lower, 956. Axis strong, 0.3% higher, 976. SBI strong, 0.5% higher, 564. The Nifty now scampering up, 33 points higher, 19,278. Let's take a very, very quick look of what's happening in FNO before we move further. Tata Communications, 2% higher, 1827. Trent taking it away, 1.8% higher at 2083. We have PNB, 0.2% higher, 6315. IOC and SAIL up in the green, 1% higher on Steel Authority, 9165. So metals, pharma, as well as PSU counters are the ones that driving momentum in the FNO basket. Nifty now gathering steam, heading towards 19,300, 44 points higher. And it is because of Reliance, 0.3% higher, 2415. Let's take a very quick look at the NSE 500 and then tell you where the most action is at the moment. Geofin, 4% higher, 243.50. We have a nice traction coming in HDFC Bank, and of course India Bulls Housing Finance, 2.5% higher, 203.20. First to Akshay. What are ticking on your charts at the moment, Akshay? What would you do? What are you advising clients?
Tata Communication firstly has been one counter which has shown some good momentum pickup in the first 5 minutes of trade. The broader chart structure is strong. It's a possible cup and handle bullish pattern formation which is trying to break out through. So there's a clear buy placed at Tata Communication. It can be taken at the current rate, even for intraday or even for a short-term positional trade. The possible targets I look forward to would be 1875 to 1900 with a stop loss below the swing low of 1775. Another space which we would be very keen would be the chemical sector. The chemical sector has staged a reversal, and most of the names from the specialty chemical space has shown a strong reversal and a possible potential to show major reversal factors as it goes right now. So SRF, you can say Aarti Industries, these are some of the names which we have on our mind for the buy side of trade.
Okay, let's quickly look at the pharma names. We were discussing Torrent Pharma and Cipla. News flow also there. Torrent Pharma has likely submitted a non-binding bid for acquisition of stake of company's promoters. 1266.5 currently for the Cipla counter, and Torrent Pharma also. Let's quickly bring that up on the charts as well for all our viewers to see. Both the pharma stocks. Let's look at so Torrent Pharma is 1842, flattish with a positive bias. But let's look at Cipla. 1266.9 currently is what I can see. 1265 at about half odd percent higher in trade currently. Your thoughts at this opening, Akshay? Would you look at Cipla at this point?
Yeah, definitely, Sakshi. In fact, Cipla has been my recommendation today in the pre-market trade, and I see this stock moving till around 1300 plus in a time frame of 10 to 15 trading sessions. So it is setting up its base at 1220 odd levels, and it's just about time that it will break out of the recent swing highs of 1275. So very strongly poised on the charts. You can look forward to buy this trade.
Okay, let's also look at Godrej Properties, which was Mayuresh's pick for the day, and see how that is opened in trade in today's trading action. Godrej Properties at half odd percent higher, 1653. So the momentum continues on Godrej Properties even at this point. Mayuresh, Godrej Properties, you've already been positive. Anything else? We've also seen a brokerage house report believing that the festive season may see many big launches coming in. Would you also be a positive on, say, DLF or a macro tech developers?
Yes, would be, because I think the kind of launches that DLF has done and the kind of sales velocity that they're generating on the day of the launch itself is a testimony of the strong demand that probably exists. I think I was reading a couple of reports, as I just mentioned, and the kind of registrations that have happened in select pockets in Western India, in Northern India, in Southern India as well, have been on a record high as we speak. And therefore, I think with the expectations that we are at the end of the interest rate hiking cycle as far as India is concerned, a large part of these property makers, specifically in the second half, with better balance sheets, should continue doing well. So I think that's the entire premise on the call related to the sector. So yeah, Godrej Properties, DLF should continue their momentum.
Let's touch base with Akshay. Akshay, I'm going to give you a list of 52-week highs with the caveat of high beta and low ticket items. BHEL, 2.2% higher, already 1 crore shares traded at 124. What would you say to the chart?
Well, as I see it right now, it is trying to break out of the swing high of 118, 119. It has actually breached those levels, which was a prior resistance we saw way back in 2017-18. So this is mostly setting up for a major upside. But when we talk about major upside, your time horizon should be 3 months plus, because the developments are really strong and positive. In fact, even if you look at the derivative readings for September, they are strong. So for September month, you can possibly see targets of 140, 145. The support now works out to around 115. And as I speak of the long-term charts, possibly around 180 is where PHL is heading for. So a very promising stock we can look forward to on the buy side. And mostly this would do well if you consider this trade from a investment horizon.
Okay, so that's the view coming in on BHEL. Staying with you, Akshay, anything that catches your fancy in the blue chip space which might be ticking well?
Well, if I see at Reliance Industries, now this has been severely beaten down, and it's been a one-way fall, and I believe there can be some bit of short covering pullback. So if you are keen on participating on a blue chip stock, because now although Jio and Reliance, Jio has started its recovery from 200 to 10 support from where it has built its base. Now I think Reliance should again get back with a short-term pullback, which you can anticipate around 2400, 2411, because 2400 in the option space has a significant put writing action, which we believe is more on the writing side, with the belief that it should reverse from these levels. So from a pullback perspective, Reliance can be on your watch list. We can target around 2460 odd levels in this pullback move. So I would be keen on watching Reliance on the buy side at the current level where it trades.
Okay. Akshay, I'll draw your attention to ITD Cementation. The stock, we had mentioned in the stocks to watch list, it's won a contract. The stock is now up 12-13% in trade right now. We've also seen a stunning move in the past 6 months, 146% higher for this stock. So the long-term charts and the short-term charts both are encouraging. 241 currently for this one. Your thoughts, Akshay?
ITD cementation has got past its all-time highs, which we noted way back in 2018. The breakout point was 220, 225 odd levels. So that sets up as a support base. Yes, the momentum is strong. If you are keen on riding the momentum for a short-term bounce trade from here, it is still setting up well on the technical charts. An upside till 260 to 275 cannot be ruled out with a 10 to 15 day trading parameters. But if you are keen on slightly longer term, that's more than 3 months, then you can accumulate it within the range of around 250 to 230, because it's not from here it's more of a trading move. It will go through a time correction phase and then reattempt a high. But yes, definitely very strong on the charts, and a stock you can look forward to on buy side of trade.
Okay. From the oil and gas space, ONGC is what I'll draw your attention, Akshay, to. Crude oil prices, like I was discussing with Mayuresh also, they're up above $86 a barrel. ONGC up 2.5% in trade right now, 178 or so. Your thoughts on this one?
Well, ONGC on the technical charts has a very strong resistance at price point of 180, 182. So at the current rate of 178, this might be more of a momentum puller where 180, 182 can be tested. So those can be your targets from a trading perspective. But yeah, if you're looking for a slightly longer term perspective, 1 month plus horizon, then we are staring at some key resistance points. So let these resistance points be overcome. There is no problem with the technical charts. It's just a about the timing and you make the best of timing the charts. So I would buy above 185 if I were looking from a positional perspective, or I would wait for a dip at around 170. As it stands currently, 182 is the best you can target for a trading bet.
Okay. All the metal stocks are also shining bright. The Nifty Metal Index is the top gaining index sectorally in trade today. Tata Steel, 2.4% higher, 52-week high levels for this one. Steel Authority at 2% higher. Again, hovering near its 52-week high levels. Hindalco, Nalco, APL Apollo Tubes, all of them up in trade. All the metals stocks, in fact, in the index are up in trade today. Akshay and then Mayuresh, you. First, Akshay, any top pick that you'd like to suggest for today from the metals basket?
On the metals basket, firstly, Jindal Steel and Power is one stock which we have recommended to our clients on a positional perspective. So our belief is it is setting up well on charts and it is also backed by fundamental data. So our belief is 740, 750 is what the targets we can expect within a time horizon of 1.5 to 2 months. The support base this stock sets up is 630, beautifully placed on the charts and an ideal candidate to go long on. Hindalco is another trading bet which we have recommended our clients in the last couple of days. Our belief is it is staging for a possible breakout, the breakout point being around 470, 75, and we believe this should be on soon. Once it does, you can look at targets of 500. So this is the second candidate in the metal space which is positioned on the buy side of trade.
Mayuresh?
So I would concur with Akshay. Jindal Steel and Power probably looks very well placed at this point of time for two key reasons from a fundamental perspective. One, I think the access that they've probably got to iron ore mines and coal mines as well. The expectations of production from both their coal blocks expected to start, which gives them a huge amount of stability as far as the volatility in raw material prices are concerned. Again, I think the niche products that they've probably got, the deleveraging of their balance sheet and expectation of strong volume growth should probably continue. HRC prices have taken an increase of almost 1,500 rupees a ton, which also should be positive, assuming the raw material availability that they've got. It continues in this. I think Jindal Stainless also is something that you should probably be keeping on your radar for two, three things. One, I think the top line growth has been exceptional. Margins have been extremely stable. And in fact, both on a quarter-on-quarter basis as a year-on-year basis, the growth has been stupendous, both on top line and bottom line. I think the main trigger for Jindal Stainless comes and stems from the fact that the value-add products that they've probably got, which gets used in rail plates, as an example, in terms of wagons, an example, already seen rail stocks and wagon stocks move significantly higher. But the main contributor for wagons is obviously going to be the material itself. And therefore, with the quantum or quantified growth that you'll probably see in wagons, both freight, commercial, as well as passengers over the next few quarters and years, I think Jindal Stainless, with the kind of specialty stainless that it provides for these wagon makers and the rail plates, I think becomes an extremely attractive bet. So I think this stock can also probably keep up with.
Would you believe it, Sakshi, that at 120 rupees, Jindal Stainless was 1 year ago at this level? And I think Mayuresh and I have had a lot of conversations about Jindal Stainless when it was 40, 50 rupees, but that was a different era in the COVID space. It was deep value then, it's adequately valued now. And of the last 16, 17 months that I see on the chart, there have been only 2 months where the stock has actually closed lower. So that is the kind of demand for Jindal Stainless. Staying with you, Mayuresh, today seems to be also the day for defense counters. All of them are up very strongly, led by MTAR Tech, 5% higher, 25.95. A lot of moon dust rubbing onto MTAR because it supplies equipment to ISRO. And we have tomorrow possibly another launch for PSLV vehicle. Are valuations okay here, or does it look stretched? At the moment, everything is stretched, but how about MTAR?
No, I think it's definitely stretched, Shail, sir. And with the launch of Chandrayaan, obviously the mission was huge success, proud moment for all of us. But all stocks related to the moon mission, I think the kind of market cap addition that has happened has been out of the box. Having said that, I think from a pure valuation perspective, you compare the mean standard deviations of the last 5 years. I think the contribution of ISRO or the missions, considering solar or lunar missions as well, is not a significant amount. I think it's more driven from clean energy as we speak. And therefore, I think the kind of run up that we've probably seen with anticipation of stupendous orders coming through, which will come its way, but it will still be a very small portion of both top line and EBIT as far as the market cap is concerned, if one really expects sales growth to be driven by this vertical itself. So I think over the moon valuations, as we speak, shares are for FTAR, would definitely wait for pullbacks on this.
And within the defense space together, we have the shipyards doing fantastic job. 3% up on Masdok, 1907. We've seen a strong traction coming in on latent view, 1.5% higher, 432. Paras Defense, 1.3% higher, 747. BEL, HAL, BDL, all up between 0.5% and 1%. Coming to Akshay on the defense space, anything that catches your fancy on the charts? Akshay, we've seen blowout numbers in terms of order books as well as stock prices. Of course, a lot of caution needs to be observed here. But what is looking on the good on the charts?
Well, Shailji, if I look at Mazgaon Dock, this stock has been one of the stocks which has staged a stellar run right from the last few months. The last few trading sessions have been dull. My belief is this is getting into a time correction, not a price correction. So time correction is it spends more time in a sideways consolidation before it sets up for the next big move. So that's the phase this stock is in, setting up for a big move now. At 1910, it's in an accumulation zone. The breakout points positioned would be around 1990. The stop loss would be 1790. I feel this breakout is soon on the cards, and once it breaks out, there would be no stopping Mazgaon Dock again.
Okay, Mayuresh, I want to draw your attention to the auto space today. Of course, it will be buzzing amidst the auto numbers. First, let's talk to you about Escorts. The stock is already up 25% in August, has been looking at a long build-up throughout this month as well on several sessions. The second one, the August numbers were not very good for Escorts, but at this point, what would you really suggest at 3180?
You have to wait for pullbacks, actually, because the move has been pretty stark. Two things here. I think the entire expectation that is built is the premise that the tractor business will do a mid-single-digit growth for the better part of this financial year. I think a large part of the growth in the coming year is expected to come through, but it's for how monsoons will play out next year. A large part of their export-oriented business from Kubota is probably getting driven well as we speak, and a lot more in terms of excavators as the main product will get introduced. So exports will have some pie in terms of the export market. As far as the railway division is concerned, I think there was a lot of buzz on the street of some kind of demerger news as far as the railway business within Escorts is concerned. Very strong business, 1100 crore market cap, double-digit margins and expectations of double-digit growth coming year. The construction equipment business expected to grow at 10-12%. And therefore, the two legs of business outside tractors are expected to continue doing well, which should drive their free cash flow yields significantly higher. Balance sheet remains strong. But the concern probably remains in terms of mid-single-digit growth. The management believes that better MSP prices, expectations in terms of a better Rabi season with reservoir levels remaining extremely robust as we speak at this juncture, might aid volume growth as we head ahead. But the run-up, both in terms of price and valuation, is a little bit too stark for our company.
Okay, but last comment from you, Mayuresh, before we thank you on Maruti, 10,036. What's next after 10,000 for Maruti?
11,000. So what I'm thinking is, it remains actually to be one of the better run players within the auto space itself. The concern that emanated for Maruti was that market shares will keep on dwindling. It did dwindle over the last few years as competition intensified. A lot of SUV launches from M&M, Tata Motors, so on and so forth. But Maruti is coming out with its own breed of SUV launches as well. The market share it had which was 50% a few years back had come down to 42. The management now believes with the launches that it has got, the footfall, the order book, that it should start recouping a lot of these losses that they've probably done. The sales network that it has got, the best in the country as we speak, very, very important for a market like India. The Nexa showrooms that they're opening in terms of premiumization of their products are getting opened at a fast pace. The royalty payments with their parent largely now settled in terms of markets and how they've gestated that. And therefore, I think a large element in terms of growth, whether it comes back strongly, it can. And therefore, to answer your question, next pit stop for Maruti is 11.
Okay, wonderful. Thanks a lot then, Mayuresh, for being with us. Maruti, of course, to double capacity in next 8 years. At the cost of 45,000 crores. So that's going to be an important stock to watch out for. The largest car maker ticking higher even at 10,036 and looking very, very positive. Thank you so much, Mayuresh. Always a pleasure having you with us on Business Today TV and getting all the insights from various sectors and stocks. We'll continue the discussion with Akshay now. Your thoughts, Akshay, on Escorts? We've discussed the sales have not come in too appealing at this point, down by about 8.5% in the month of August at 5,592. Maruti yet to report numbers, but the stock is up. Bajaj Auto, I'll mention that too. The total sales here have dipped 15% at 3.4 lakh units, and domestic sales have seen a dip again of 20 odd percent right here. But the stock looking positive at 0.8% at 4651.
Well, if I first look at the chart of Escorts, on the overbought stock, divergences on the momentum indicators, all this signal that wait for dips, do not jump at the current rates on the current prices. So I will wait for a slight dip in Escorts. 315055 is where it trades. The good level to participate on the buy trade would be somewhere around 3000. So I'll wait for a level of 3000. Once it nears that, I will review it and go for a buy trade. And if I look at the charts of Bajaj Auto, well, Bajaj Auto comparatively is setting up a small price support base around the 4550 mark. Right now, 4650 is where it stands. So it's more of a consolidation phase we are in. I would be keen once it breaks out above the 4700 mark. So I would be a buyer once it gets past that resistance level. So wait and watch for both the auto space, which the stocks which I mentioned right now. A caveat in Bajaj Auto, buy above 4700, and for Escorts, it will be a buy on dips.
Okay, let's look at the broader markets. The Nifty now up 58 on the last working day of the week and the first working day of September. 19,311 is what I see. Absolutely flat trade on Nifty Bank at 43,995. And the entire action in the market has been concentrated on the cash counters, especially when you see the PSU banking, the PSU basket. I'll just mention some names. Dredging Corporation is 3% higher at 519.50. Remember, this is a very, very high beta stock with a very low floating stock, so it moves very, very rapidly in either direction. We've discussed Masdoc. It's again going higher, 3.5% higher, 1915. National Aluminium, as Sakshi pointed out, the entire metal space is up in the green today, and specifically government metal stocks. National Aluminium 96.95, 2.5% higher. We've seen a strong uptick coming on Hindustan Copper as well. I saw it breach about 160 rupee levels. You can take a look at that as well. Strong traction coming in ITDC, IRCTC, GMDC. These are all very, very high beta, relatively low ticket sized items which are doing extremely well in the market today. Anything else, Akshay, that Sakshi and I may have missed on the momentum side but has caught your fancy?
Well, Shailji, you are absolutely right on the stocks which you named, and I would reiterate that these are the stocks to be in rather than searching for other bets. These are the best picks you have, because on the charts too, Hindustan Copper is a fabulous buy bet. very strong chart heading for 195, and a very interesting chart for Dredging Corporation, a pole and a pennant about to be broken. So that's a bullish development. It will catch momentum in a day or two, and if it does, it will take you to around 580, 590 levels. So dredging and the other stock which you mentioned are absolutely fab bets. Sale can be one if you are keen on. Steel Authority of India Limited. This is picking up traction up since from 86 to 93 in the last 4 days. A metal stock and setting up for a possible breakout above 96, 97. We see this going to around 110 odd levels from a time horizon of 10 to 15 trading sessions. So this definitely can be on your buy bucket list.
Okay.
Okay.
And Sakshi, there is another interesting development that I'd like to point out. I normally see the list of all-time highs versus stocks hitting 52-week lows. It gives you a sense of where the market is headed. And, in the list of all-time highs, I have only two stocks that are below 100 rupees. They being the split NLP. This is the steel unit that has been shaven off NMDC at about 59 rupees. But a whole host of stocks which are 4-digit, 5-digit are showing record highs. Some of them we've discussed in the past. Of course, Maruti today at a record high. Linde India 64.15. Persistent we've discussed, another 100 rupees higher, 53.87. AIA Engineering, MTAR Tech, Trent. So what is getting expensive in terms of purchase price as also valuations is the one which is running away on charts as well as in prices. It's a complete lack of selling volume that is creating this kind of squeeze which is pushing these stocks higher. Any view that you would hold, Akshay, on Linde India 64.30? I know it's a high ticket item, but what can you do?
Well, Linde India again, one more chart which doesn't stop at all. In fact, there are so many counters which just makes you believe that let Nifty be where it is. We are going to participate in these stocks because there's where the max return is. Linde India is definitely a very strong chart. To, it's moving
Sure.
into blue sky territory, and I would be looking at targets of 6,700 with a support of 6,000.
Okay. Shail, we've been discussing the chemical space and fertilizer space, and now the stock that is inching up almost 20% higher, DCM Shriram. Of course, it's 1100 rupees kind of a stock, but DCM Shriram comes next right here. Akshay, your thoughts on DCM Shriram?
Well, if I look at
20%
the
के बाद क्या?
charts of DCM Shriram, then this is getting into a slightly time corrective zone. No problem with the charts. It is just that it is spending some time within the range of 120 to 140. Maybe for the next 10, 15 trading sessions, it stays in this range. But I would suggest if your time horizon is 1 month plus, you can start accumulating the stock. Base is 120, setting up for a breakout above 150. They should see 175 to 190 within a time horizon of 2 to 3 months. So definitely a buy candidate, but with a slightly longer term horizon.
Actually, Sakshi was referring to DCM Shriram Consolidated, which is up 20%. But like we've discussed, this is the bull market where don't look at the name, just look at the price and the chart action. And that is what is happening. 20% up on DCM Shriram Industry, DCM Shriram Consolidated at about 1118. And Sakshi, would you believe it? This is at an 11x volume over the 5-day average. Somewhere like 7.5 lakh shares have been traded. Beyond 20%, would you like to say something, Akshay?
Apologies, I missed the stock, Shailji, but yeah, on circuit, I believe today, as it stands now, maybe still one more round of upside. This might take it to the all-time high levels, which we saw in 2022. That's around 1225. There's where I advise to book out of profit in the stock. So momentum is still intact. Maybe some more steam still left to go. If you can manage to buy it, definitely it's a buy candidate. It's about riding the momentum. 1225 is where I see it on the charts.
Okay, it's half an hour into trade, Sakshi, and up 20%, and the volume is 11x. Actually, that shows you the kind of interest that traders have in counters where you will not expect selling to come in because of options and futures missing there. So, repeatedly, we've said that cash is where all the action is, and where all the action is when you need to be super, super, super careful to step into counters which are 20% higher in the first half an hour of trade. Be very, very careful. And it's not just DCM Shriram consolidated, it's a whole host of stocks which are at the upper circuit. There is no let up in the bull curve that is happening in small caps and mid caps. Sakshi.
Absolutely. Akshay, if you could please stay on with us, please do. We do have to shift focus to our corporate radar space. And the company on our radar today is Century Plyboards. The management of the company is with us. Mr. Keshav Bhajanka joins in. He's the executive director of the company. Very good morning to you, Mr. Bhajanka, and thank you so much for taking the time out for this discussion on Business Today TV. Of course, in the month of August, early in August, you reported your earnings, quarterly earnings, where there was a dip of about 13% in the standalone net profit at about 84 odd crore rupees. And the company said the net revenues from operations were somewhere to the tune of 882 odd crore rupees. Marginal growth over the last period's earnings as well. We'll discuss with you the earnings fine print and the outlook, but I want to first understand about the demand scenario. You will know we've been talking about how there is, the real estate space, the construction space is clearly buzzing in trade, and that augurs well for you as a company. I remember speaking with you in the Q4 earnings, where you did say that the demand was slightly sluggish. Has it improved in Q1, and what's the outlook now?
Good morning. Thank you so much for having me. I think, there has been a little bit of a setback because of the interest rate hikes. So, what has happened is that EMIs have gone up, and as a result of which, the decision to refurbish a newly purchased house has taken a slight bit of a backseat. You're seeing real estate sales are still good, and the sector is doing well. But I think the refurbishment or the renovation or the construction of a new home, that scenario has been deferred a little bit. So it is causing a bit of a demand shortage in the short term. But I'm sure that this is momentary. It could be for a quarter, 2 quarters. And going forward, demand recovery will be both strong and robust. I think H2 of this year should be reasonably good.
Okay. Good morning, Mr. Bhajanka, and welcome to Business Today Television. Over the last 20 years, we've seen fabulous wealth being created by the ancillaries that supply to the real estate sector, whether it is companies such as yours or switch makers or tile makers. They've had a party that's lasted for decades, and I'm sure it's going to be the same case in the coming decades forward. Please share with us the amount of fresh capacity that's coming in for Century Plyboard. I see that you've introduced a lot of new products. How are you facing in the market, and what's the pipeline looking at over the next 2 quarters in terms of fresh capacity addition?
Good morning. It has been a very difficult party to get to. I think that, in terms of capacity addition, we are fairly confident on all our segments, and this reflects
Okay.
in the capital addition. I think if you look at the short term, next 2-3 quarters, we are adding a capacity in MDF in the state of Andhra Pradesh. It is a greenfield unit with 950 cubic meters of production capacity. We are adding a new laminate manufacturing unit, which comes on stream in H2 with larger size presses, again in the state of Andhra Pradesh. We are looking to add on a slightly longer term a plywood capacity in Hoshiarpur, which will commence from FY25. And secondly, we are also adding a particle board capacity in the state of Tamil Nadu, which will come into production in FY25 as well. So if you look at the four major segments, we're increasing capacity all throughout. The capacity increase in particle board and MDF is definitely larger because it requires larger size presses. In plywood and laminates, the capacity is to augment particular segments or particular geographies where demand still remains robust.
Okay, Mr. Bhajanka, I also wanted to understand your pricing strategy. In Q4, you had taken some price hikes. In Q1, have there been any price hikes further? And what's the outlook right there? And what is the margin outlook that you have for yourself for FY24?
Yes, in Q1 we have taken, rather in Q2, in the month of July, we have taken a further price increase in the plywood segment. There have been price corrections on the other end with regards to laminates and with regards to particle board on account for laminates, for instance, due to lower raw material costs, and in the case of particle board due to import competition. For this current financial year, our outlook is as follows. Plywood, we're looking at 13 to 15% EBITDA. For laminates, again, 13 to 15% EBITDA. For MDF, 25% EBITDA. And for particle board, 20% EBITDA margin.
It's very interesting, Sakshi. I was just seeing a comparative of Century Plywood with its four rivals, which is Green Lam, Green Panel, Stylum, and of course Green Ply. It's one of the best, return on equity and net margins across the board at 20.1 and 10.22% respectively. So great going there, Mr. Bhajanka. I just needed to understand, of course, you launch new products to bring in higher margin products that will add to both your top line as well as your net margin. Tell us how raw material prices are moving in your industry, and what are you doing to curtail their rise? Are you integrating backwards as well?
Thank you for those kind words. I think that raw material in our industry is mostly commoditized. Today, for instance, timber. The majority of timber that we are using is agroforestry. Now, considering the forest laws in India, it becomes very difficult for a private player to get into agroforestry. So I don't think backward integration right now is really a focus. Having said that, there has been softening of certain prices. For instance, chemical prices have reduced drastically, as you are well aware, particularly the two chemicals that are predominantly used by us, such as phenol and melamine, have softened. And this has helped to ride over the drastic increase in raw material prices in the form of timber. Now, timber prices are likely to stay elevated for the next year, year and a half, which in the short term is definitely a concern for us, but in the long term will ensure greater availability of timber and it will fuel our ability to grow further.
Okay. Mr. Bhajanka, I had to ask you, particle board and MDF are two of your key segments that actually contribute somewhere around 20% or so to the company's business overall. You've been talking to us about the additional greenfield capacity. What will this contribution reach to after this capacity addition? And over the next, say, 3 to 5 years, what could be the potential on the total turnover from these two critical segments?
I think the growth percentage in particle board and MDF is likely to be higher because of the lower base. Now, if you look at the new capacity that we're adding in Andhra Pradesh, that should lead to a turnover of anywhere between 900 to 1,000 crores. If you look at the particle board capacity, the peak turnover is likely to be an addition of 500 crores. So these are going to contribute substantially to both our top line and bottom line going forward. The reason for the faster growth, as I've already explained, the total MDF industry in India today is 4,000 crores, whereas the plywood industry is 20,000 crores plus. So the MDF industry, I would still say, is in its nascency, and similar for particle board. As they grow, we would like to take up a larger portion of the growth there.
Okay. Mr. Bhajanka, you have a very, very strong balance sheet, and you've mentioned 4 capacity expansions coming in over the next 18 months or so. I see that your debt profile of about 244 crore rupees has gone up by 44% year on year, although at no stage is it bothersome because of the strength of the balance sheet. Any chances that you would prepay this debt, or are you completely comfortable with this level?
I think debt in the short term is likely to increase, but we're a very financially prudent company.
Absolutely.
The chairman's motto is turnover is vanity, profit is sanity, and cash is reality. So that is what we have abided by. However, you cannot risk losing out on growth for fear of some debt on the books. The majority of our expansion is going to be funded through internal accruals, and the debt that we do take on board is going to be more in the form of bridge financing because our cash flow, our accruals remain very strong. So I think you're correct. We'll be prepaying most of it.
Okay. And one more interesting statistics, Sakshi, I have shared with you. I just need to highlight the fantastic performance that Century Ply has given to its shareholders over the last 10 years. A 39% CAGR in the past decade, which has beaten both indices, the mid cap and the FMCG index, by a very, very wide margin. And perhaps this is also one of the reasons why the company is very, how should I say, tightly controlled by the promoters. They own 73% stake. Mr. Bhajanka, fantastic returns, but any chances of dilution from here? 73% you own?
No, I think we are very very bullish on the company, and
Absolutely.
we practice financial prudence in our personal capacities as well. We are very frugal people, so no, there is no scope for dilution anytime in the near, medium, or long term as a mentioned.
Okay.
Okay.
Sakshi, over to you.
All right. I just wanted to ask you on the exports outlook as well. If you could give us a sense, because the current global environment is a little uncertain. What is the outlook that you have here?
So in exports, predominantly we export from one of our divisions, which is laminates. And there too, if you look at the overall revenue of the company, our total share of exports would be less than 5%. But there are segments where we are not present. For instance, the cubicle segment or the larger size segment where we haven't created any capacity till now. The capacities in Andhra Pradesh are both directed towards this, and we see fairly robust growth in exports, predominantly due to a very negligible base on our part. Going forward with the new port or close to port based capacity in both particle board and MDF, there will be potential to export both as well. Our target, as always, remains the domestic market. Like I've said, we are very bullish on India as the future. So while that holds true, whenever there is an opportunity to profitably export, we'll definitely be trying to avail the same as well.
Mr. Bhajanka, there is no doubt in my mind when you go shopping to set up interiors of your home, the kind of margins that your company and your peers enjoy, it really, really hurts the wallet. But if one is a shareholder, then one is really, really very happy. I needed to understand that there is, I believe, a lot of idle capacity in your part of the world when it comes to smaller unlisted players. In a bid to expand growth, are there any takeovers, mergers, or acquisitions planned?
I think, we are a little ruthless when it comes to capacity expansion. If you look at plywood or laminates, then we have a firm belief that when we can create a capacity at a lower per unit cost, then it does not make sense to go into takeover sort of a structure. However, having said that, if a good opportunity presents itself at the right valuation, we will definitely look out for the same because, as I've already mentioned, we are bullish on growth. In MDF and particle board, there are far limited opportunities. If you look at particle board, there are three players some who have not even commissioned, who have continuous presses in the country. If you look at MDF, there are five. So the options are quite limited. But yes, if a lucrative opportunity presents itself, why not? However, it has to be at the correct valuation. It has to generate the sort of revenue and margins that we intend at a lower cost than it takes to set up.
Okay, well, many thanks, Mr. Bhajanka, for being with us on this special edition and discussing with
Thank you
us
so much.
all those insights about the business outlook. All the very best for the coming quarters as well. We hope to have you back on Business Today TV pretty soon. Many thanks, Shail, for joining us as well and sharing with us many stocks that we had to keep on our watch list today, most of which we have discussed are already up in trade. Most of our guests had talked about Godrej Properties, Cipla. So the action is continuing. The chemical space space, fertilizer space, that continues to be the top of the mind, and we'll continue to track the market movement all through the day for all our viewers. Currently, Nifty is back above 19,300. We hope it continues to stay this in this space and upwards. In today's trading action, which is the first day of the month, and the series 219 points higher for the Sensex. The Nifty Metal Index clearly the winner here, 2.5% higher, the top gaining index. Oil and gas follows, and apart from it, the auto stocks and the small cap 100 index that continues to gain in strength today. Adani stocks flattish to slight negative bias today. The Apollo Hospital stock is currently flattish as well on the Nifty 50. Asian Paints, Axis Bank also slightly negative, but let's look at the Nifty gainers at this point before we wind down the show. The top gainers at this point on the Nifty 50 index. We do have Tata Steel, Hindalco, JSW Steel, the metal counters shining bright anywhere between 3 to 4.5%. Do stay tuned onto with us throughout the trading session for more Market Today shows. What you should also get ready is for our special series on Market Masters, where market gurus reveal their investment strategies for a winning portfolio. So join us on this coming Monday, that's 4th of September, with Tahir Batra, President and CIO at Invesco Mutual Fund, to get his market insights and in-depth market analysis. You can also send us your queries on this number, that's 730-308-0488, and questions will be taken live.